What's up, everybody? Big apologies about last night and having to reschedule to tonight. We have about 100 people that are going to watch this class. Looks like there's only 9 in here now. Hopefully, that wasn't because I had to reschedule, but the recording will be available. Shout out to everybody that is watching it live and stuck through it. I do apologize. I ended up having getting my computer fixed. Absolutely hate Windows, how I can't restore an image of the last hard drive, but it is what it is. Got most of the class put back together, some of it just going off of memory. But thanks again, guys, and I do apologize about that. So if you have not watched the price action introduction, please watch that video. All of you should have it if you have this link. That is the introduction to price action trading and understanding it, which in my view is the basis of all technical analysis. Once you have mastered price action trading, aka naked charts, then you can begin to add to your arsenal indicators and whatnot. I had that indicator class I taught the other day. This is great to add on to price action trading. Some traders do prefer just to only do price action trading. They prefer the naked charts. I do not. I do feel that price action trading is integral to my analysis. And I always start with this and take a look at that. Then I add my oscillators, my volume analysis, Elliott's, things like that, lagging indicators, and so on. But you definitely need to understand price action trading. Today we're going over the strategy. And again, if you didn't watch the introduction, please do, so you can understand it, what's going on here. But today we're going to cover a few strategies that I have found particularly useful in crypto. Not all price action strategies work in crypto just because our markets never close. So some of the traditional strategies you learn don't always apply because they typically are focused on gaps between a market close and open. But these ones I have found with pretty good success rates on there. So I'm going to share them with you and how to trade them, what to look for. You'll probably have to review this video a couple times. Most of my videos, I move through the TA pretty quick. Today, I'm going to try to take it slow, but generally, it's best to review things anyway, so that way you can memorize it. Candlestick patterns. Memorize your candlestick patterns. There's a number of cheat sheets out there for memorizing that. There's also indicators to identify candlestick patterns. However, they're not very accurate. So I do recommend you memorize the basic candlestick patterns. If you cannot find that cheat sheet, please send me a DM and I'd be happy to send it to you. But yeah, so make sure you watch the introduction course if you haven't already, and also memorize your candlestick patterns. If I were to cover that in a class, it'd be extremely boring, and it's just one of those things you have to memorize on your own. That being said, let's get into the strategies. So the key with price action strategies, price action trading strategies, is confirmation, and candle closes. Many times you'll hear me talk about, on YouTube and Discord, on Twitter, wait for something to confirm. As my trade was based on Elliott's today and a number of other factors that I tweeted out, that was a confirmation trade also. It did confirm, and I did enter into the trade. We'll see how that plays. But reason for bringing that up is you always have to have confirmation, and every single one of these strategies are based on confirmation of the trade. So always keep that in mind. Don't try to time or predict the markets. Let things close and confirm. There's an opportunity to trade every hour in crypto, every 15 minutes. There's always an opportunity. So just let it present itself. Don't try to get in there early. In the end, we're going to go over a particular range that most price action traders didn't like. I didn't like it either, but there was a ridiculous amount of examples of price action strategy on there that you could have used. We'll go over that at the end. But there's always an opportunity. Just let it present itself. Let things confirm. Keep in mind that none of these strategies are going to be clean when you're trading these. I tried to find the best examples I could when showing you guys these things. But when you are looking for these yourself, they will not always look like this. They're going to be kind of loose, especially as volatile as crypto is. We don't always get those perfect closes and confirmation that we want. The general strategy of them will always apply, though, even to unclean setups. So don't always look for the perfect setup when entering into a trade. You can, but there's always a setup available. You just need to, be patient on it. Even if it doesn't appear perfect, that's just the nature of trading. You don't always get a perfect setup. They rarely fit exact requirements, but once you master these and you master reading candlesticks, trading becomes cake, and you can begin to add to that technical analysis puzzle that I always talk about. If you missed it before, it's puzzle pieces. Technical analysis, you want to learn a puzzle piece at a time. And as you begin to learn these puzzle pieces, the whole picture becomes clear. And then one day it'll just click. TA will click. You master price action trading, which may be one piece. You master, various indicators. You master Elliott wave, so on and so forth. And everything becomes a clear picture. Just like with a real puzzle, you would never just take one puzzle piece and the puzzle would be completed. There's not one form of technical analysis that I rely on solely. I use all of it. Price action trading is the beginning. Failed setups. Let me talk about that real quick before I get into examples. Real quick, I'm seeing a little bit of skip around on the Google Hangouts. If anybody in the chat can tell me if the connection is clear enough that you guys can understand what I'm saying. I'll give it a second for you to respond in there because it is delayed between here and YouTube. Eugene, are you still in here? If you could just type in the chat for me real quick if the connection's okay enough to hear me, because it does look like it's skipping around quite a bit on Google Hangouts. Or anybody, Mark, just anybody type in there. Man, I do apologize to everybody that was expecting it last night. Okay, thanks, Mark. Thanks, Eugene. Appreciate it. We don't have as many viewers as I hoped, but everybody will be watching the recording. Really surprised at the amount of people that signed up for this. Thanks, Sabine, also. This is looking good. Soon, my site will be live, and all these classes will be automated. You won't have to go through my messages. It'll be quick responses, so on and so forth. Back to what I was saying. Failed setups. As with any strategy or setup, there's always failed setups. You have to understand that you need to trade these setups correctly with the correct entry, correct stop loss, correct take profits. Hold on, we have some people. I do apologize. Let me send this to somebody. We have some people trying to enter in right now, and apparently the link is not working. So give me 1 second. Very unprofessional. I apologize. I'm going to get these people in it. Okay. Sent the link again. Failed setups. So as with any kind of technical analysis and trading, there's always going to be failed setups. You have to expect those. You have to place your correct entry. You have to automatically place your stop loss as soon as your order fills. When you place buy or sell, the next thing that should come automatically is your stop loss. Then place your take profits. Do not even finish watching this if you don't use stop losses, because at this point, this seminar will be worthless. Take it from me. I've entered into tens of thousands, potentially hundreds of thousands of trades in my trading career, and I promise you stop losses have saved me so much money. And because analysis is not always right, I've been quoted before of saying my trade may not be right or my analysis may not be right, but my stop loss always is. And that's 100% true. I don't care what people say about getting stopped out and then it wicking back into the direction you originally intended. That's just the nature of trading. Please always use them. Failed setups occur no matter how perfect the setup appears. Markets are unpredictable. We have seen ridiculous things in crypto, especially. Traditional markets are a little bit more stable, but crypto is much worse. So please use your stop losses. That's why I focus on them so much, because they will save you and make you quite a bit of money. If you trade correctly, the failed setups will not matter long term. All they will do is simply reflect short term. You can have 9 out of 10 trades get stopped out, and if you trade it correctly, that one trade that goes through perfectly will wipe away the 9 losses from those 9 stop outs. So keep that in mind. All of that being said, let me check my notes to make sure I've covered everything. Opportunities always present itself. I've covered that. Be patient and wait for setups. All right, let's go to screen share and get this rolling. Nope. You know what I need to do? Present to everybody so you can see this fully. I'm going to give YouTube 1 second to make sure that you can see my charts perfectly before I start. It is delayed, so I have to give it a second. But sometimes YouTube does not always show it. Okay, we are good. Okay, so when you are trading naked charts, clearly trending markets are the best. I covered this in the introduction video. However, ranging markets do work too, and we're going to cover this range right here of CHOP at the end because, you know, I did kind of in the last video talk about how horrible this range was for a day trader. It is for a day trader, but great for a price action trader. Let me flip over to this real quick. As you can see, this is what we'll be going over in the end. Just some of these other, you know, the ridiculous amounts of setup in that range. My point in showing you this is there's always an opportunity in crypto. Just let it present itself. That being said, let's jump right into it. So the first thing I want to cover is called the outside bar. The outside bar or candlestick, outside candlestick, is a candlestick where its shadow engulfs the previous bar or candlestick prior. Typically, it's at support or resistance. In this case, what we see here on the chart, it is at resistance. We're going to go through the setup on this and what to identify on it. We have NASDAQ pulled up on this. Reason being is I was having trouble finding a perfect outside bar, and I recalled this one on the NASDAQ from a while ago. For some reason, I remember strange trading days. I don't trade traditional anymore, but I remembered this and this outside bar. I think I had a discussion with somebody about it that did trade traditional and how perfect it was. But we're going to go through each one of these strategies. Again, there is a million different strategies with price action trading, guys. These are the ones I have found most useful in crypto, the most easiest to identify for beginners. These are beginner courses, not advanced. If I do another price action trading seminar covering more strategies or something along those lines, or possibly even some live price action trading, all of you guys viewing this will get it for free. It's just the people that sign up for the new classes that don't. So there's going to be a series of classes. Price action trading is one, possibly indicator classes, which most of you have seen. But if I do another one, not planning on it, I will be giving that to you guys all for free, of course. So yeah, every once in a while, I'm like, you know what? I'd like to teach people this and cover this. So I'm going to do a seminar on it. So odds are I'll probably do another price action seminar. But for now, we are covering setups that I have found the absolute best in crypto. Let me adjust this here. Watching multiple screens here. Okay. So the outside bar, again, is a candlestick where its shadow engulfs. Let me turn this off. The shadow engulfs the shadow and the candle itself engulfs the previous bar. It's high and low. So we have the high here where the wick covered that, and the low here where the body covered that. The outside bar has other names too. It can be called a bearish engulfing in this case, or a bullish engulfing, depending on the setup. Obviously, bearish is down, bullish is upwards. But the outside bar or candlestick, outside candlestick, is a candlestick where its shadow engulfs the previous candle beforehand. So in this setup here, I've rewinded it to show you guys as if we were watching it live. Yes, this is hindsight, but for the sake of the class, I can't always find examples in real live trading, so I've gone through. I had about 20 more charts for all these different strategies I was going to show you guys, but the computer crash made me lose them because I just had them pulled up as links. I did not save them on TradingView, of course, like an idiot, but found some good examples to show you guys. So in this case, let's say we were watching this live. The NASDAQ had a nice clear trend going up. This is a reversal. Again, price action trading works best when you are trading with the trend. In this case, we are trading against the trend because we expect a reversal. This daily close on this was gigantic. It was a big reversal. A whole whopping $2.10. I know that's ridiculous in crypto, but in the traditional world, this is everything. So a reversal like this, every price action trader in the world is going to be looking at the close of this candle. This candle actually closes here. When I do press play and fast forward, you'll see how it plays out. But let's say this is moments before the candles close, and we are looking to short here because of this nice engulfing outside bar. So how would we trade it? So with the outside bar, typically Some price action traders market sell or buy depending on the trend. In this case, it would be a market sell at the moment's close. With the outside bar, I have found, especially in crypto, that it's best to place the actual buy or sell marked here in green. In this case, it's a sell. Slightly below, typically you want to go 2 to 5 pips in the traditional world, but with crypto, let's just say this is BTC, forget the NASDAQ part, you typically want to just eyeball it below the wick. And the reason being is these gigantic engulfings, or outside bars, do have a fairly high rate for reversal or a short-term reversal. So I like to place my entry just slightly below the wick or above it, depending on the trend. In this case, it's below. So as I go through these, keep in mind, just so you guys know, so the green lines will always be the entry line on the trade. Let me make sure you guys can see that green line okay. Yeah, it looks fairly well on my YouTube screen. But so the green line will be the entry, the red line will be the stop loss, and our pink or double pink lines will be the take profits. So as I go through these, just keep in mind each one, that's how they'll be set up. Red is stop loss, green is entry, pink is take profits. So in this case, this candle's about to close. We're going to place, instead of a market order like most traders, down here like a seasoned trader, because we know that these type of engulfings typically can be oversold conditions. So we place this here, and then as this plays, we're going to place our stop loss at the top of this candle body. Now you can place the stop loss in a couple places. Let me thicken this up for you guys so you can see it pretty well. So you can place it at the wick up there of the current candle that's about to close, or you could place it on the body up there. In this case, because it's so large, I want to take the risk model down a little bit, and we are going to place it at the top of this body as this closes. We have our entry slightly eyeballed right there, 2 to 5 pips in traditional world. Now, with this outside bar, where do you place your take profits? Let me highlight this a little bit bigger so you guys can see all of these slightly better. There's a couple places on this chart that we can do it. I've placed 2 take profits here. I'm a big fan of multiple take profits. But what we're looking at here, again, let me check the YouTube, make sure that we can see it clear. Okay, we can. Catching up. All right, so you can place them as support or resistance, prior support or resistance. In this case, we have prior support here and we have prior support here. We did have a pin bar down here, but we'll get into that strategy here in a little bit. So we've placed our entry, we've placed our stop loss. If the market allows you, what you would do is you would place a stop limit order here because obviously price is not there, or you could wait patiently if the market does not have that type of option. All traditional markets do, not all crypto markets do. And then you would place your take profits down here at support on these levels. In this case, we've placed 2 take profits. Let's play this forward and see how it takes place. And we'll pause as it goes through for commentary. Okay, so the following day opened, and obviously it shot right down because we're replaying. It wouldn't happen that fast, but we've hit our entry. Now, we have our entry. Stop losses placed. Take profit 1, take profit 2 is there. Let's watch how this plays out. Following day opens up. Everything's looking good. We did have what's called, if I can take you through this real quick, a pin bar. It's typically a reversal pattern reflecting a sharp reversal in the opposite direction with a long wick or a tail. But in this case, we're going to let the trade place through, and we may move our stop loss down to that prior candle opening because there is a little bit of resistance there to keep it from going forward, or this resistance here. The more logical place would be there. We place it, and we let this play on. So this is going forward. Again, we're still in profit, and boom, we hit our first take profit there. Now, it smashed through support. So clearly, you know, in this case, we had 2 take profits. We're going to leave this open. And then at this point, I typically like to move my stop loss just slightly above the entry there or at entry to keep us profitable and not losing any money. There's nothing wrong with moving it to entry. Don't get greedy on your stop loss, though. You can also place a trailing stop. For those of you guys who don't know what a trailing stop is, most markets allow them. You set a range. If the price moves within that range too far back, then it will close the position. In this case, we're going to place a manual stop market right at this close right here. We play this forward. Next day opens up. Boom. We got our second take profit with a beautiful pin bar. We'll get into what the pin bar is in a minute. But real fast, this is a single bar reading where you would long. We'll get into better examples on that. And that's how a perfect outside bar trade would take place. We had shorted there all the way down to $90. It's a $6 difference, or I'm sorry, $4 difference on our entry. That's how you play a perfect spring bar. I'm sorry, outside bar support. Now we can see continue to dump here, but that's the nature of trading. We would gauge everything else at that point. You don't re-enter into the trade once you've closed it. The logical place was here at our supports. Again, we smashed through this support, but that's a lot of supports to smash through on this trend. So logically, we place our take profits there. That's how the outside bar works. Any questions on the outside bar before I move on? I'll give it just a couple seconds for you guys, and then we'll move on to the next strategy. Looking good? Okay. No questions on the outside bar. We can always recap later. So, second setup is called the inside bar. Again, these are strategies that work very well in crypto. I am not covering every single strategy. There is multiple strategies to be using, but I am covering the ones that I found most useful in crypto. And so this is what we're looking at with the inside bar. So the inside bar is a pretty popular candle formation. It only requires 2 candles to present itself. You do need a clear and present trend for this to take place. You can see we found support here. Disregard this support shout out right here. We're going to be talking about that support here in a second in this trade. But we found support, trend reversal, bounced off of this very nicely. We can throw our volume indicator on there. I don't have it on this one. That price action traders like if we'd like, but we have a clear trend going upwards. And then we have what's called an inside bar. Now that we've identified the trend, what the inside bar is, some traders look for this as a short-term reversal pattern. And the reason why we're going to call this an inside bar is because we had prior resistance that this candle right here smashed through and is now acting as support on. It did wick down onto this, but remember, we're trading off a confirmation here. So as this candle is about to close, again, this is a hindsight trade as an example. We are looking at this candle, which is going to close in about a minute, and it's closing above this prior support level right here. So we're going to assume, based on that the trend is still continuing upwards since we found support at resistance, an SR flip. So the theory is that after price has trended up or down, in this case up, for an extended period of time, the pause in price movements represents the inside bar. What we get is a short-term reversal of the trend. In this mannerism, the inside bar is looked at for a short-term trade or swing in the counter trade direction, but typically means the trend prior will continue. So as this candle is getting ready to close, as a price action trader, we are going to examine this and take a look. We did wick below the support right here where it is green. We have placed our entry here at the support. Again, remember the green is our entry. When I'm teaching today, pink is take profit and red is our stop loss. So as this closes, we place our entry here at the support. In this case, we are not going to be market buying into this. Remember, this is a 2-candle system, but we do need to have a trend. We place our stop at the prior wick. If it breaks through the support, I would expect it to go back down. But to be safe, we're going to place it at that wick. Where do we place our take profit? At prior resistance. Again, this is the Bitcoin 4-hour. So we have prior resistance here that it rejected off of logically. That's the most next logical rejection point at that. So we place our entry. Let's see how this plays off. Oh, let me slow this down a little bit. So the next candle opens up. What happens? Boom. Okay, so again, this is the way the replay system works on TradingView. It just plots the candle. It doesn't plot the movement in between. But what had happened here is this had opened, wicked down into our entry, and mooned back up. Now, the reason why we place our entry here, yeah, I can place. Somebody in the chat would like me to place these a little bit thicker. No problem, guys. I understand it doesn't always show as clear. How's this look? Does this look a little bit clearer for you guys? We can also expand it like that. Let me take a look at the YouTube and see if that's a little bit clearer. Yeah, I can see that's pretty thin. I'll try to make everything a lot thicker as we go through this. Okay, great. Hey, King Nick, how you doing, man? All right, Endgame Soup, Crypto Sugar, what's going on? Simmons, all you guys. All right. So if we were watching this 4-hour candle in real time, obviously it wouldn't have shot up like this. This is during a 4-hour period here. But what had happened here is this had wicked down. Now, the reason why I wanted to place this on this support is because this setup right here has the potential for a very high failure, seeing as it is a reversal candle. But it is also a higher, there is a higher bias to it being a continuation since we have found that support. Now, that's exactly what happened. We wicked down pretty much just off of the support ever so slightly right there, filled our entry, and then made over the 4-hour move up. So as we got up to this 4-hour close, we rejected a little bit off of this support that is now resistance. And now we're looking to hit the second resistance here, which was the ultimate rejection point. So let's watch what happened on the next 4-hour candle and see if this trade takes place. Boom. We got our perfect close off of that. We wicked a little bit higher. No worries. It's just a little bit of missed profit on that, but you cannot stress on missed profit. So this inside bar setup worked perfectly. As we can see, we had the prior trend. It got exhausted for a moment, but found support at prior resistance. We took our entry, rallied up, hit the prior resistance before, position closed, perfect trade setup on the inside bar. Let's watch how this takes place. This is a nice little reversal candle here. And as we reverse, it should reverse back on down. And it did. Okay. Any questions on the inside bar setup there? I'll give it a second for you guys to catch up. And then we'll move on to the next one, which is called Spring at Support, which is very common with Bitcoin. Yeah, sure thing, Brian. So Brian asked, what would the stop loss have been? Our stop loss here, let me put a little price label onto that. Our stop loss would have been approximately 39.52. We want to put magnet mode on. Let me place that there. Because we are placing it as this candle closes. Remember, confirmation, confirmation, guys. Make sure I'm unmuted here. I am. As this candle closed, we're going to place it on the wick there. A very tight stop loss is what we could call this. Honestly, you could place a stop loss down there, but that's really not how you trade this pattern because it is a continuation pattern. You want to place it at the bottom of that wick there. Let me zoom way in for that, see if you can see that. But we placed it at the bottom of the wick here. I don't know if you can see that on the screen because as the candle closes, then we take our entry. Did that answer your question, Brian? Game Soup. So an inside bar tends to work as continuation mainly if it is near prior support. Yes, you don't have to find support there, but in order for this to have a lower strike rate and me feel more comfortable with it, I like to see it break support and find this exact setup right here where we break through resistance and find some support because this can act as a reversal, especially in crypto, which is extremely volatile, as we know. And it loves to flip off traders and say, you know what, you think you know price action trading in TA? Well, you don't. We are reversing here where we shouldn't. So yes, I typically for this to lower my strike rate and to lower my trade failure, like to find a prior resistance such as this, turn into support. Make sense? All right, let's move on to, let me show you again. Okay, this will go off of what I was talking about a moment ago, Game Soup. Here is a failed inside bar right here. So we had a clear, let me reverse this ever so slightly for you guys so that way we can take that off. So we had a clear trend, clear bounce off support. I wanted to show this example because this is one of those times when the market told you, F you do not know what you're doing with price action trading or with TA. We did end up hitting this resistance here. So we wanted to take a look at this inside bar. Is it going to continue up? If we're looking at Elliott's, I would have told you no, and some other oscillators, but volume looked good on it. It was higher. We had a higher high on this. So we're going to look at this inside bar. This one failed. So what we would have done is we would have taken our entry here would have been at this moment because we did not find a support level there, but let me turn this green. This was slightly different example than the last one. And then we're going to place our stop loss on the wick there, which is pretty identical to the wick prior. And then, I'm sorry, I am mixing up here because I know that this trade fails. So we're looking at this as a reversal back up here. So we're going to place the stop loss there. Let me get rid of that one. Drinking too much coffee too late at night. Place our entry there, and where would we place our take profits? In this case, not knowing that this is going to fail, we would typically place our take profit right around so. This is a failed inside bar setup. Again, this is why you use stop losses. As it entered in, we can see what happened, instantly stopped out. Even if we placed our stop loss clear down here, it was still a failed setup and ended up reversing pretty far down, and the position failed. So this is why we use stop losses. This is why we want to trade on confirmation to lower this type of setup right here, but it still does happen. That's the nature of day trading, guys. That's the nature of all trading, is you have failed setups, and you need to keep that in mind. And they don't matter, though. We had a very minimal loss on the stop loss here, and we look for the next setup. There's several setups right here. Okay, so the next one is spring at support. Let me thicken all these lines here. This yellow line here is our support line. I put this here because this is a strategy that requires us to identify some support. Let me thicken up all these lines for you guys, and we will zoom in on everything. Okay. So this, with price action trading, you typically don't use any indicators other than moving averages and a going indicator for the most part. So I don't particularly like this volume indicator, as I voiced in the past, and I will show you why. We're going to also use the OBV and the CMF on this because we get similar readings on it. But what we have here is some pretty clear support levels. The spring at support, we see this all the time with Bitcoin volatility. We see these massive springs off of support. Volume is very good for confirmation on this before, but as I've said before, I don't like the traditional volume indicator. But what we have here is a nice support rally, and we are starting to form some higher lows on this. So we want to take a look at entry again as we come back down to the support area right here. Let me move this over so you can see we had some very clear support. We could also throw the VPVR volume indicator on here, which we'll do. And we'll go with visible range. And we can see here that there's pretty massive support off of this volume indicator. If I can zoom that in for you guys. As a matter of fact, let's change the settings on this. Let's go down to 50. So we had some fairly decent support down in this area. I don't know how well you guys can see that, so I'm going to turn this off. But let's just say, for the sake of this trade right here, we are seeing very good volume, and so we're going to place our buys here, our stop losses at this prior wick here. You know what? We need to replay this. This is not in replay mode. No wonder this is looking really funny. Okay. This isn't even the right example that I had. I apologize, guys. Give me 1 second. All right. We've got it now. So, okay. So if you can see these wicks here, I don't know how well that's coming through YouTube. Let me expand my screen so you can see this here. We wicked off a support and we started to create some higher lows. So we want to look at an entry at the long this if this was not a hindsight trade. So what I want to do here is I want to place our buys as this engulfing right here. We wouldn't even call this an engulfing. Bounced off of and continued to make a higher low. We want to look at entering into a trade. Now, there's a number of ways to do this. You can market buy in, or you can wait for it to close. In this case, we're going to wait for it to close, and we're going to place, considering we had a lot of consolidation around here and multiple wicks, we're going to place our buys there with our stop loss either here or much tighter on the single candle right here. We could also place it 3 candles back, but in this case, we're going to place it there and take a look at what happens. As we look to enter into this trade, we can see that once we broke through this, let me back up and explain this a little bit better because I didn't quite explain the logic behind this. So as we began to see 2 bullish candles here, correct, off of support at this bottom here, we want to take a look at volume, right? Now, volume is lower on this, but if we take a look at the OBV, OBV is higher and the CMF was subsiding. Again, another reason why I hate this volume indicator that everybody uses. So we're going to turn that off, take a look at the OBV and CMF here, and see if we can get a potential another wick off, because we had a rejection up here, but then we came down and made higher lows again. So what's that tell me? That we need to look for a spring off support, bullish position to take. So let's place our buy order right above these candle closes here and wait for this candle to close, which, if we were watching this live, closes within a couple seconds. We see volume subsiding. We see it picking up. It's not quite at the levels it is there, but we place our buys and we wait for what happens. Buy fills. Let's back up one more candle that's playing too fast and rewind this until it slows down. Buy fills. We are great. We placed our stop loss either at the bottom of that candle close on the prior from our entry, because remember, our entry we waited for here on confirmation, or we place it clear down here. Logically, though, it makes sense to keep it here off the wick of that because we had a number of support levels this, so our stop trigger would be there. Again, our take profit is set above here, so that way we can right at our prior resistance, our prior swing high, excuse me. I need to quit drinking coffee this late, guys. I apologize. So as this trade enters in and it moons, we are looking at our volume levels, which are looking great. So we keep the trade open, obviously, count on our stop loss. It plays forward, starting to play forward some more, and boom. So at this point, considering we're so far off of there, I would begin to look at my stop loss here off the spring off support at that prior entry, which was acting as pretty good resistance, which will now be support at that point. This is a very small trade considering the amount of volatility crypto has, but this is on the 6 hour here, and we did move up from 37.80 all the way up to 42.94. So I guess the profit there was actually pretty decent. We ended up wicking above this resistance here, which is fine, but the candle closed a nice little reversal candle, so we're definitely going to keep that take profit there. And if we were awake watching this instead of manually closing the position. Let's take a look at how this played out. It ended up going above again, but again, with price action trading and with all trading, you don't want to beat yourself up for missed profit at all. Any questions on the spring off support there? I'll give it a second before I continue. I was jumping around there quite a bit. Let's blame the coffee. But yeah, any questions there? The next one will be off of To recap on that, though, we want to look for higher lows off the support retest. We had the support retest here. The higher lows were higher, and we confirmed it with volume that it was going to rally. Simmons, what are the best time frames for this type of strategy? Do they work better on higher time frames compared to lower ones? Yes. Higher time frames trade setups are always better than lower time frames. Lower time frames, there's too many factors at play. A whale could come in. You can't predict whales. You can't predict black swan events. So we definitely want to look for higher time frame setups. Those have the lower strike rates. However, as a day trader, I take many setups on lower time frames. But if you're just beginning, you definitely want to start with higher time frame setups for sure. And you will also save yourself a lot of money that way. The next one we will be covering, if you guys have more questions, go ahead and type it in, but I'll just cover it real fast, is the pin bar. The pin bar setup is a very, very common setup in crypto with these long wicks or tails in crypto. I'm going to show you a bearish and a bullish example on this chart. But yeah, the pin bar setup is very common. It is a single bar setup. I'll give it a couple seconds for more questions, and then we will continue. Alrighty, looks like we are good on questions. So the pin bar setup is, as I mentioned, is extremely common in crypto. We get these huge wicks up. Some people call them stop hunts, whatever. Really, it's just price discovery and the amount of money flowing in and out of crypto in unregulated markets. But a pin bar is typically a reversal pattern. Reflecting a sharp reversal in the opposite direction with a long wick or tail off of a candle. These can be very dangerous trade setups because they are going against the trend sometimes, but they can be a continuation of past trend, and it's best to trade with the bigger trend. In this case, we're going to be showing you a reversal, which is typically, again, we want to find one that's a continuation of the trend. There is multiple ways to trade this. So a lot of Forex traders that will teach 3 different ways. In crypto, I do not recommend these 3 different ways. I believe there's only one way, and it does include market buying at the candle close. Market buying, you say, wow, that sounds risky. It is not something I recommend. But in this strategy, it does require a market buy. There's very few times when you should market buy. Let me make these pretty thick for you guys. So that way you guys can see it okay. So again, this first example we're going to show you is a bullish example against the trend. I'm going to go in reverse after I show you guys, come back over here to this side of the chart and show you a bearish example. But there's multiple ways to trade it, as I mentioned, but with this one, you want to market by the close. So with a pin bar, you want to typically look for these long wicks or these long tails indicating a reversal. Considering we had 3 of them here, this is looking like a good trade setup. They're all higher wicks, but most of the time you only need 1 bar. It's a single bar or a candle. So we have this candle is about to close on the Bitcoin daily. So we are going to place our market buy. Looking at this, hold on one sec, guys. We have another person that is trying to get back in here. They got disconnected. They are messaging me on Twitter. One second, I'm sorry. This is all people that are trying to watch, and I'd like everybody to watch. So keeping an eye on my messages too. Hopefully I'm not screen sharing anymore. Should be good. All right, resent it. Let me know if not. All right. Boy, I look like crap. Somebody recommended that I get a yellow light for my podcast or my cast because they want to see me. Well, I got news for you. This is all about the TA. This is not about me. Just kidding. All right. Where was I at? Okay, so we had 3 different pin bars here. Well, these weren't exactly pin bars, but what we want to see with the pin bar is typically a very small body and long wicks. In this case, we're expecting a reversal here. We're starting to see some bullish volume. But let's take a look. Game Soup asked, are hammer candles, dragonfly dojis, Takuri lines, etc., all under the category of pin bar? Yes. If it's a reversal candle, typically, well, not even a reversal, you can get them continuation. But yeah, those do apply to pin bar setups for sure. Anything with a long wick, still not working. It's the same link. Oh, man. Hold on, guys. Let me message him. Yep, restart your computer, buddy. All right. So we want to look for these wicks. This is on the daily. I'm sorry, I keep getting distracted, guys, here. Double pin bars are pretty common at support, and this is what we're counting on. We have really, yeah, we have a double pin bar here, even though I don't like to see this wick up top. But let's just, for the sake of this, say this is a single pin bar, and we are looking to market buy the moment this closes and place our stop loss right at that same candle. Again, these are typically single bar readings, but so we want to place our stop loss at the bottom of that wick once we enter in on this. This is one of the very rare times when you should market buy into a trade. Now we are placing our take profits. Considering this is a bear trend, we are not going to get real fancy with our take profits here. We are going to be reasonable on our take profit and place it at this prior engulfing open. So this daily closes, we place our market buy. What happens? Boom. Within that day, remember, again, this is a whole day's trade right here. Let's go down to the 4 hour actually and do this. Reverse this here. Let's see if it stays on replay mode. It does not. Of course it doesn't. So we're going to go back here. So the daily closed right here and opens up right here on the 4 hour. So let's watch this on the 4 hour as if we were watching this live. The daily closes. We place our market buy. What happens? Boom. Market buy is there. We place our stop loss at the end of that daily wick right there. We have our take profit. We watch this as it plays through. Everything is looking good. Let's watch the CMF and the OBV pause. 4 hours later, we're looking at the the OBV looking really good. Continuation is there. CMF is there. Candlesticks look great as far as price action goes. The reason why I paused it there is because we're a little concerned about this resistance right here, and are we going to break it? But volume looked great on that. We keep the trade open. It continues upwards. Next 4 hour candle. So we got, whoops. Let me reverse this back. I wanted to show you guys this. So can anybody tell me what this was right here? This candle right here. We just covered it. Let's see how well you guys are learning. What was this candle? Oh, we're going too far forward. What was this candle right here that we're looking at? As we're watching this trade happen, what did we call this? Bonus points. Very good, Game Soup. Inside bar. Yes, this was an inside bar. The same setup that we covered a moment ago. So the inside bar, you could either add to your position there. However, I don't recommend typically adding to positions, especially when you have a perfect setup like this, but you could, especially if you have some extra money to play with. What happens? This continues up. We hit our take profit. Volume was looking very good on there. We kept it open. Boom. Let's say a reversal there. Let's say we were not the smartest trader in the world and we took our take profit away. That should have been our indication right there, that candle that we should close. But either way, that was a perfect pin bar setup and trade. Now, let's go back to this daily here. And now let's look at a bearish version of this. Keep in mind, not every pin bar is going to be worth trading here. Again, this is a market buy one, so it is, you have to be very cautious on that. Nope, it wasn't even a failed inside bar, Brian. It was actually a successful inside bar because the trend, remember, is where we have the entry there. So let's say we missed the entry off of that pin bar there. We want to here. Let me fast forward again. Let me fast forward to that exact setup we were just at. So this is actually not a failed inside bar. This is a successful one. Let's say we missed this pin bar pattern here. I'm sorry, I'm mixing up my words. And if we had missed this, then we look for an entry here on the inside bar, which is this one that we just covered a moment ago. Right there. So let's say we'd missed it, or we would like to add to our position. We're feeling very confident. Then we trade the successful inside bar because we have a clear trend going upwards, and it did end up playing out pretty perfect. So yeah, that one wasn't quite a failed one, but yep, that is a typical inside bar where you could add to your trade or continue it. So let's back up here now to a bearish pin bar setup. Again, a pin bar setup is these long wicks right here. Let's say we had long this one, and now we have, I don't know if you can see this long wick going way down here. I typically would have longed something like that for a number of reasons. The guppy would have told me to long it, oscillators, and then rode it up here until this daily right here was about to close because we have another pin bar setup, but this one is bearish. Rallied upwards and then rejected back down and closed clear down here. So what do? We want to place our market buys here at the close. And because this is a single bar setup, remember, we want to place our stop loss at the top of that wick there. Now, this one gets tricky. Where to place our take profits? So this is what we're going to do. Let me pull this Fibonacci extension tool off there. Good. Glad you understand it, Brian. And again, I understand a lot of this stuff is new to everybody. Please rewatch this show and send me, if you're watching this, that means you have access to my messages. Send me a message. I'd be happy to explain things to you guys. Want you guys to completely understand this and be educated traders. You know, this stuff is not easy to remember right off the bat. Trust me, I know. It took me years to master this type of stuff. I was a price action trader first. In my younger years, when I was 17, 18, learning how to trade. And, you know, then I moved on to different forms of analysis, and here we are now. So it does take time, guys. Nobody catches it right away. All right. So let's say we are looking for a trade here. We have long this pin bar set up here, or we didn't. Let's expand this so you guys can see this really well. Let me brighten all these. Or make these thicker, excuse me. Again, with the pin bar setup, this is one of the rare times where you're market buying. So this is about to close. Again, confirmation, 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 guys. So we wait for this candle to close. As this closes, we're going to place our market buy right, or not place our market buy. We're going to market buy right at the close. Market sell in this case because this is a reversal because the wick is going up. With pin bar setups, remember you're trading the counter wick. So if the wick is pointing up, you are trading a bearish short. If the wick is pointing down, you are trading a bullish long. In this one, we are placing our market buy or market sell there, excuse me, and our stop loss at that. So where to place our take profits? Because if we go back, there is no support here other than some trends clear back there. We're not going to rely on that. So what we're going to do is we're going to take this previous high where this trend started, go down to this previous low right here, and then we're going to retrace this back. Now, how I did that, we go into this Fibonacci here and our pitchforks and all that, and we're going to go to trend-based fib extension. Our first click point is that high, right here. Second click point is this low, and then our third click point is where our stop is going to be at, because that is where the pin bar setup is. Actually, we want to place this right around so. Nope, that's correct. So there's a number of places we can do it. We can place it at the 6 Fibonacci. Oops, did I click the right tool there? I did not. Back up. Nope, we had the right extension tool there. So there's a number of places we could place this take profit. We can place it here. We can place it at the 786. We can place it at the 5. We're going to go clear down to this 1, though. Reason being is this was, in this case, looking at this, we've broken all support, so we expect this to fall in a major fashion. Now let's play. Boom, the next daily opens. We place our market sell, and that's what happened on the daily for that daily close. We ended up going way down there. On that daily close, we could just close our position there and place our take profit there on our short. That is one way to do it on this pin bar setup, or we can wait for it to continue down considering there's not much support under that, and we had fallen out of it, and we did. And that's where we had ended up hitting. Now, again, this is a hindsight trade, but seeing as we didn't time it perfect there, seeing as I placed it at this 1 retracement level, the reason why I did that is because there is no support under that. Any questions on the bearish or bullish pin bar setup? The next part of this will be the wrap up of it. And what we're going to do is we're going to go over to this little range right here. And I just want to point out the number of opportunities there is in trading and why you want to wait for confirmation and setups on these things. They're always there, even when we're ranging like that. So I'll give you guys a couple seconds for questions. Hopefully I've explained everything clear to you guys, but let me know if I haven't. Looks like we're good. Okay, we paused there. All right. Everybody's still alive. Press 1 if you're still alive, so I make sure that nothing has happened to you guys. All right. Simmons says everything's clear. Good. So I know Simmons is alive. All righty. Let's take a look at this price action here. 1111. All right, guys. Glad to hear that you're alive. So I replayed it back here. This is before we broke the support. I just want to show that this range had multiple opportunities to trade. I identified a few of them on here, but these are some of the setups that I showed you that I feel have very good success rates in crypto, and I just highlighted them here. To be honest, almost about every other candle here presented a price action trader setup. But we're going to focus on the resistance and the supports here. So we have a support there. There was a, let's zoom way in. There was a nice pin bar set up there. We market bought there, and we would have closed up there at this prior resistance. I know this looks like very little, but once this closed, we ended up buying at 67.23, and we would have closed around 67.61. These are all day trading opportunities that I want to show you guys. We have now a bearish pin bar. We ended up market selling right here. Place that green on the close. It worked out very nice. We would have typically placed our take profit right at this point because that was a major support level. We ended up going down through it, but that's fine. Let me place that right below that support there, but that's fine. We missed some profit on this short. Doesn't matter. Where would our stop loss have been on this bearish pin bar setup? You can place it way up there at the wick, but we're going to be careful on this one because that's a huge gap there, and we're going to use a little bit of risk management and place our stop loss there. Now, going over here to this area, we have spring of support and also a pin bar bullish setup. There's our long wick right there. We would have market bought as this pin bar closed. It would have rallied up ever so perfectly. Where would we have placed our take profits? Honestly, I would have placed my take profit clear up there. Back in hindsight, I probably would have gotten a little bit worried about it when we started ranging there, but I would check volume in this case. I'm pretty sure volume was looking decent on that. It was rising. The CMF was dropping. So maybe I would have closed this position early. But in this case, we had market bought at this position here. Or I'm sorry, let's place that because this is a pin bar setup. Also a spring at support we had. So you could have played that either way. Honestly, I probably would have played it with the pin bar setup. It was looking very good. I'm not sure I would have kept it open long enough to hit this take profit here. But, you know, that's something I would have had to look at way back when. I'm just showing you guys examples of the different price action trading that we get, even when we're ranging, because technically this is ranging. Trending markets, as we can see here, trending downwards, price action trader's dream. Ranging markets, not so much, but there's still always price action to play off of. Another huge pin bar setup right here. As soon as this thing, so this wicked way up, this was some Bitfinex, excuse my language on this. I don't know how to describe this other than Bitfinex fuckery here with Tether. And so, yeah, I would have definitely shorted this as soon as this daily closed. Where would we have shorted? We would have market bought or market sold on the pin bar setup there. Stop loss would have been really tricky on this one, but we still placed it on the wick there. Let me zoom way in for you guys on that one. Let me get rid of this so that way we keep the chart clean. And this, so you guys can see this. We'll replay it. Nope, we won't because that'll mess it up. But we had market sold at this area. We would have placed our take profit. Considering this trend was still trending upwards, I would have placed it at the support level that I already have marked here. Let's place this pink, not purple, and move it slightly above. But yes, this pink support here is where you would have placed your take profit. Inside bar setup. Here we go. Let's get away from the pin bars. Like I said, these pin bars are very common in crypto because of the amount of volatility we have. We had an inside bar setup. Let's say we missed off the spring off support here or the pin bar, because technically that was either one worked. We would have played this inside bar. We would have placed our buy there, our stop loss at this prior wick there, and our take profits probably around this range right here. So we missed a little bit of profit, but no worries. We missed profit and it rallied up, and then we had another bearish pin bar to set up. So what do we do on the bearish pin bar here? Let me see how well everybody's catching on, so that way I can understand if you guys are learning. So this pin bar right here, this setup that we're highlighting, let me delete that because we're past that now. Let me delete that inside bar setup. I just want to kind of give you guys a little test. So this pin bar right here, where would we place, how would we place our buy order? Somebody tell me on this. Let's say we don't see this trend at all right here. Where would we be placing this if we were to reverse it? Let's reverse it. So how would we trade this pin bar setup? What would we be looking? How do we enter it in? Yep, very good, Game Soup. We market buy at the candle close. So that 6-hour candle closes. Boom, we market sell. I'm sorry, not market buy. You said market buy, but you meant market sell on the bearish one. Yeah, I know. I do the same, buddy. I knew what you meant, though. Okay, where do we place our stop loss at this? So let's place our market sell right like so. Market close. Very good, Simmons. Where do we place our stop loss on this pin bar? Do we place it at this candle body? We're going to place it on this wick over here. Very good, Witt. Simmons, this wick right there, right as we market buy. Take profit. Where would have been the logical take profit point at this point? I would say this support. I'm sure it's here. You got hard for you guys to see it. Let's change that back to red because that is our stop loss. And we play it forward and see how it goes. Very good, guys. I'm glad you're learning. If you're not following everything I'm saying, feel free to send me a message. I'll probably get to them tomorrow. But boom, let's pause that. Woof. That take profit played out perfect right at that support level that we already had marked. Yeah, first support in this case because it was trending upwards, but now it is trending downwards. Let's play it forward here. Oh, I want to go back a little bit. We had a brief bullish pin bar here. And what I mean by there is this nice little doji wick here. Wick down pretty nice. And so we would also play, if we were a day trader and very experienced in this, we would also long here or close partial order position and then re-add to it at that top there and write it down there. That would have been your ultimate setup and confirmation on there. All right, guys, I am about out of breath. That was an hour-long seminar of the price action trading setups that I like the most in crypto. To recap, confirmation, confirmation, confirmation. That is the key to price action trading. Let the candle closes. Only one candle close if you place a market buy. If the other trade setups do not hit your entry, don't worry about it. Then that means that setup was not correct. You will have many failed setups, which is why you always use a stop loss. I cannot impress upon you enough. You know, the nature of markets require you to use a stop loss. There's not a professional trader in the world that doesn't use them. If they do claim to not use them, then I guarantee you they're only a couple clicks away from getting wrecked. With price action trading, it is the basis of all TA. You want to learn to master this. There is multiple strategies. Again, these are the strategies I use and I like the most with the lowest strike rates. I could go over other strategies, but they have higher strike rates. And these are the ones you should focus on mastering first. The outside bar, the inside bar, the spring off support, the pin bar, double pin bars, and so on. There's always an opportunity in crypto. Be patient, wait for confirmation. If it doesn't work, oh well, that's the nature of trading. You move on to the next candlestick to make your next trade. As you begin to master price action trading, as you guys know, I am not a naked charts trader. I like to chart with oscillators, indicators, moving averages, Ichimoku, Elliott waves, volume analysis, you name it. I use harmonics. I use multiple pieces to complete my whole puzzle of technical analysis. One day, as you begin to master each one of these puzzle pieces, boom, all of a sudden it will all click. Stay patient on it. You will pick it up, I promise. It may seem very complicated to you at first, but as time goes on, it just all of a sudden one day you're going to look at a chart and it'll click. And everything I've been saying, including the puzzle piece situation or example, will make perfect sense. That's about it from me, guys. Much appreciated. To everybody watching the recording, I apologize about last night. Even the guys that are live tonight, appreciate it. I'm very, very happy to see this many people sign up and get educated. Again, I'm not trying to get rich off of these classes. I'm just trying to get the recordings out there. And so when my site launches, those can be there too. And, you know, also educate traders because we have a lot of uneducated traders getting wrecked. But I appreciate the support. I also appreciate all the tweets that and the feedback you guys send me. I really, really like that stuff. Even if it's criticism, I can take it. So much appreciated, guys. You guys have a great night, and thanks a lot. I'll leave it open for about 5 more seconds for questioning, and then gonna grab some dinner and whatnot. All right, guys, that's about it. Appreciate it. If you do have questions, feel free to message me. If you're watching this, you do get that, which is a steal in my eyes because I typically charge quite a bit for one-on-one consulting, way more than the price of this class. But I want you guys to stay educated and understand what I'm teaching. So if it's confusing and you've watched the video over and over, don't worry about it. Send me a message. I'd be happy to take you through it and explain it again. See you guys.